just having the resilience to literally follow up like 3, 4, 5 times.
Being concise is always the biggest thing. And like you said, speaking to people that are already doing that role versus going to those senior people who are probably going to be the decision makers and whether you get to that role.
I had a very small investment team and it was 2 billion assets under management since then. You have a bit of imposter syndrome, I think, when you're starting out in a new job.
Do you think there's going to be like a death of the generalist investor?
It may be a bit harder, but I think it's not impossible. I think once people see something on TV, they immediately trust it. ITV's channels, they reach almost 70% of UK house persons, which is, I think, a lot more than people think. Goodness.
Ooh, we're ready for the main bit, baby. Sorry. Don't put that in the snippet. Don't. Ladies and gentlemen, welcome back to episode 16 of the Mergers podcast. It's been a little while, a lot to catch up on, a lot to fill you in on going into the year ahead. But for now, I thought I'd introduce my co-host as ever. He's the founding associate of Back Future. He's studied in 3 countries, done deals in 4 or 5, and answers more DMs than Sydney Sweeney on a Friday night. Ken, how you doing?
Doing good, man. It's been a very long year. Founding associate just for 2024 changes next year.
Oh, really?
Mm-hmm.
That's good. Tell the viewers.
Yeah, just moving up to principal, man. Yeah.
That's amazing, man.
Yeah, this is my grand announcement.
Yeah, you didn't even tell me this off camera. So that's, taking me by surprise. That's amazing. Congratulations, mate.
Thank you.
Obviously, Ken's got in my ear as well. And I've got a new job at a fintech. So thank you for your persistent sort of peer pressure.
Thanks for leaving corporate.
Yeah. Yeah, no. It's early days, only been there a few weeks, but obviously, it's a change of scene from a big bank, but it's good. Yeah, so we know we've been a bit inconsistent with episodes. Ken, you're in, I'm trying to say, New York, Dublin, Helsinki.
Slush, big time. Conference season,
Yeah, there you go. Just, what is it? Shaking hands and kissing babies.
Presidential run.
Yeah. I was obviously in Mexico for a few weeks between jobs, which was amazing. If anyone gets a chance to go to Tulum, go. But no, that's why we've had a few weeks off. And we've also got some good news we can't say who yet, but we've agreed a sponsorship going into next year.
Yeah, some exciting stuff. So we'll be very much more consistent in 2025. Things will be more organized.
Yeah. Weekly episodes, potentially another sponsor, we'll see. But we got at least one confirmed. Going to do some partnerships, some more in-person events. So the diary's looking great. It's not been wasted time. We've just been busy sort of getting ready for the year ahead. But more importantly, onto the star of the show, Mahim Husnain. How are you?
I'm good, thanks. How are you? Thank you for having me.
Really good. You're more than welcome. Thank you for coming on. Obviously, this close to Christmas. And yeah, very excited to end this year with a great guest, a really interesting story. Do you maybe want to tell the viewers a bit about yourself and what led you to being in sort of ITV and venture capital?
Yeah, sure. So I started about 9 years ago worked my way up into venture capital, done a couple of jobs through consulting in the private equity space and then private equity investment, and then eventually moving into VC. But yeah, initially I started on a training scheme at KPMG in their private equity group. I was there for 4 years. I did my accountancy qualification, and from there I decided to pivot into the investing world.
Nice. Okay. And so, yeah, I mean, obviously KPMG, everyone knows who they are. I'm assuming you did the ACA. Is that the one that you do?
Yeah, the ACA.
Yeah. Okay. So that's 4 years or 3 years to get qualified?
Yeah, it's 3 years. I did it alongside work in London. But yeah, I got to see a lot of kind of private equity, mid to large cap deals. And I think that gives you a really good kind of technical base when you're going forward into investing.
Okay. And before we maybe get on to the current role, just for the earlier stage viewers who are still, at KPMG or trying to get in, would you say it's most important, obviously now working in private equity, to be in that private equity team at KPMG? Or is it just getting the exams, the experience, and then sort of lateraling later? Is that possible as well?
Yeah, I think when you're first going in, I think if you have an idea that you eventually want to end up in something like private equity or VC, I think it's really worth aligning your experience earlier. So I think even if you it kind of doesn't really matter where you start, if you start in audit or advisory, as long as you try and get exposure with the teams who are specializing in those areas. And if you can, I think also to, let people know that that's what your interest is, and to be able to kind of innovate and bring new ideas to work on that specific area. So when I first started at KPMG, I was involved in just through myself kind of outreach to startups, kind of building a roster of who was up and coming at that time and what kind of deals we could do with them, and then suggesting those to the executive team. So I think there's a lot that you can do. I think it doesn't really matter where you start, as long as you have the passion and the interest, you can definitely make your way.
Okay, so that's quite interesting, like taking the initiative in like almost bringing leads to more senior people.
Yeah.
And what does that involve? Is that just being on LinkedIn and going for coffee chats, both, I suppose, with these potential leads, but also with the people in the team that you might want to join?
Yeah, I think, it's both. Definitely, build your network within the firm. I think there's so many opportunities in a large place like that you might not be able to have that network later in your career when you're working somewhere that's more siloed or smaller. But I think make the most of all those people, because they also know people, and you'll eventually might have to go back to them at some point later down the line. But in terms of, I think, scouting for opportunities, yes, you should just reach out to people on LinkedIn. A lot of desktop research is really helpful, but if you have an idea of where you want to build your expertise, I think it's good to commit early to a sector and to go with that. I think if I was to go back, I would have definitely done it that way, rather than kind of take a meandering path and figure out where I want to go.
I think that's been like a bit of a recurring theme from people, is that one of the best ways you can differentiate yourself is by having like domain sector expertise.
Yeah.
And I suppose the tricky thing about that is knowing which part of finance you want to go into. Mm-hmm. Did you always sort of know you wanted to go into this sort of like media role?
Definitely not. I think I think my path is probably a lot more kind of, not straightforward than people who know exactly what they want to do and want to go into finance, and maybe they already have, connections in the finance world. I kind of didn't have any of that. Everybody that I knew was in the medical field. So I think kind of the idea that I even wanted to do something like go into finance or business, I kind of had to take a lot of steps and figure it out as I went along. And I think that's probably partly just driven by not knowing what the opportunities are. But I think for people who want to get their foot in the door and want to learn more about finance, just ask people around you. And even if people that you reach out to say no, I think that doesn't really matter. You can just keep going and ask the next person, and I'm sure eventually you're going to get somewhere. On
that, I would say like it's very easy to get dejected, and I'd be interested to know if you have this with like your role. Like you don't get a response from someone, you message them again, you don't get a response. Is it easy to think these like senior people are ghosting you or just not interested? But just having the resilience to literally follow up like 3, 4, 5 times. And it's amazing how many times they come back and be like, I'm really sorry, I'm just crazy busy. Yeah. Because if people aren't interested, they'll normally sort of let you know. So like an absence of response is not necessarily a reason to give up. Yeah. And I think you don't even have to target super senior people. I think people who are already doing the role that you want to do, or maybe they've built their career a little bit, but they've done things that are interesting to you. I think it's definitely worth sending a message. And I think you kind of have to be authentic with it, just be yourself, because people are really responsive to that, rather than if they see a generic message, they are not in the mind to kind of reply. But if you give them more information about yourself, I think people are helpful. So yeah, I think like being concise is always the biggest thing. And like you said, speaking to people that are already doing that role versus going to those senior people who are probably going to be the decision makers, and whether you get to that role, knowing what you want and talk about it in
understanding manner is definitely important, and like not getting those, treating everything like a sales motion, right? If you reach out to someone, know stuff about it, but also have that other route to go in, like say, oh, I know this person knows this person, so let me speak to this person, reach out here, but then also reach out over there and try to make that connection. But like, you know, on that sales motion portion, we were doing a panel with Russell, who's on the pod before, and you know, people are busy, people have schedules, which is perfectly fine, but you know, if it's not a no, then it's always still in play. But don't think that someone's like ignoring you, you know, just kind of being consistent in a mindful way.
And actually, one of the like more impressive people that I spoke to at Barclays who'd moved from the corporate bank to the investment bank, I was like talking to him about how he did it and like, you know, what his path was. And he was like, I kind of saw like the 3 sectors I wanted to go into. So that's like industrials and whatever. He was like, I literally went from like analyst to associate to VP to like director MD. And he was like, the thing about that is like you can make the mistakes with the analysts in a way when you're like, you know, beginning your networking. If you go straight to the MD, like, you're going to get one meeting, and if you cock it up, you cock it up. And he's like, I got to learn more. I got to understand like, you know, the way the team think, the jargon they use. And so by the time I got to like the VP, the director, he was like, I'd kind of like learned so much about what was going on. I was like enmeshed in their team. Yeah. And I thought that's such a better way than, you know, the sort of alternative, which I get why people do it. You're a bit fresh faced, but they go straight for the big dog. And they're like, you know, come go for a so what do you do? And it's like, you've got to know what he does before you get to that meeting.
If you aim for the king, better shoot correctly.
I'm not trying to kill him. We're trying to get a job.
Well, you need to make sure there's an opening, right?
Yeah, exactly. The only downside was I did hear about another story of a guy who did a similar playbook. And then that MD got fired by the time he sort of got to like, you know, he had a few chats with associates, analysts over like 6 months. Did it, you know, got just past the sort of VP stage, was like really ready for that big coffee chat with the MD. MD got fired. I think a VP or two went with him and he was like, right, square one. That was like a whole year gone.
At KPMG, were you doing anything on the consumer side, or was it all just kind of wide range?
Yeah, so I was basically a generalist at KPMG, and even after that, when I worked at a private equity secondaries fund, it was all generalist experience. It's just that I always had an interest on the consumer side and the intersection of consumer and technology. I think it's a really big opportunity going forward. So I always wanted to be involved in that. And I think knowing that helped me find the right opportunities, in the space.
Do you want to touch on your time at like Hollyport Capital then? And like the secondaries there? And then we'll go on to the ITV VC thing, which I think is what everyone's quite interested in, because it's an interesting new model.
Yeah, definitely. So after I qualified at KPMG, I knew that I wanted to get hands-on experience in the generalist investing side, and I had the opportunity to join. At that time, it was quite it was up and coming secondaries fund. Now they're much larger, but they had a fund of 2 billion and a very small investment team during COVID, and I think that was a big jump in terms of being front-facing, going out talking to LPs and GPs, doing a lot of the technical work on valuations and writing investment papers. I think it was quite an intense 2 years, but I think it was, probably the biggest thing that gave me a very solid foundation for going into a role where I had more autonomy. And whilst I was there, we were looking at public and public stocks as well. So I think it was it's good to kind of, in the beginning, I think, of your career, if you don't know where you want to specialize, to get a really solid kind of financial foundation. And if you're looking at generalist opportunities, you have an opportunity there to choose where you are most interested in. And it can be multiple things as well. But I think you can figure out as you go along. Okay. And that's kind of what I did.
And Hollyport, was that just like your standard due diligence, like building a model, that kind of thing?
Yeah, so I guess because it was secondaries, you're not looking just at one asset in one deal. You're kind of looking at a portfolio of assets or a portfolio of fund managers. And I think it's a really interesting strategy. At the time that I was working on it, it was, probably in the highest growth period that it's had so far. And I think people are much more aware of the strategy now.
Yeah, okay. Do you want to touch on that anymore? You just dropped it in that when I was there, it was the highest grossing strategy, but people have clocked on to what I did. So,
I mean, I think the good thing about working in a secondaries fund is you see the whole. So it wasn't we were just looking at venture. We looked at like venture, growth, buyout assets, and you look at the highest performing fund managers, and you get to know them in a lot of detail.
Does anyone remember where we
Might need some editing. Not gonna lie.
This is why we had Gav, the wizard. But yeah, so more seriously, maybe could you touch on some of the like investments or strategies that you had there, and obviously why they've sort of been adopted by the wider market?
Yeah, so I guess at the time that I joined Hollyport, that was 2020. That was kind of when secondaries was taking off, and since then it's continued growing. But the fund at that time had a very small investment team, and it was 2 billion assets under management. Since then, it's grown a lot. But I think the benefit of going into a small investment team is you have a lot of exposure across the deals, and you can kind of be as involved as you want. And I think looking at a bunch of different strategies. So at Hollyport, we didn't just look at venture. We also looked at venture, growth, buyout, assets. As a portfolio and assessing that, I think you get a really broad view of the private equity and VC landscape, and that gave me an opportunity to pick the areas where I wanted to specialize and where I wanted to do more work. And so, I guess even if you don't know what you want to do earlier on, I think going into a generalist investing role after consulting is also a good idea.
Do you, on that like generalist v specialist, I can understand how like it's really helpful to get a broad experience when you're young, and it gives you a better platform to then specialize. But do you think there's going to be like a death of the generalist investor, and things will continue to get more and more specialized, or do you think there'll always be a role for people who can bring it all together under like one fund?
I think there'll always be an interest in people who can do generalists, just because I think there is a benefit to understanding a lot of different business models and comparing them. I think it can make you a better investor in a lot of ways as well. Rather than, I mean, obviously it's valuable to know your sector, but when you're comparing a startup in one space to another, you just have a different perspective on things. So I think there's still a lot of value there.
Okay.
How about you?
No, I mean, we've kind of touched on this before, that finance feels like it's almost got a bit like sport, where if you're not like in an academy at age 11, on your, internships and work experiences and spring weeks, like, it just feels like it's got earlier and earlier. And obviously the glory stories of like the MDs who were ski instructors until they were like 33 and then just like walked into investment banking. Like it feels really hard to sort of find many people who make a serious career lateraling in later in life.
Yeah.
And I think, across like, public and sort of public markets, hedge funds, certainly seems that everything's more quantitative, and the like the generalist fund manager is slightly being replaced by pod shops.
I think in general, probably the younger generations, they just have so much more information at their hands now, in terms of, I think they are so much more knowledgeable about finance because of that. And so a lot of people that you're competing with, they have probably been working on something that they're interested in for years and years. And if you didn't figure out exactly what you wanted to do in finance until later, it may be a bit harder, but I think it's not impossible.
More optimistic than me, perhaps.
Or you just walk into it. There's still opportunities to walk into things,
Yeah.
Especially in VC.
But you love it. You're always sharing memes.
That's the job.
Yeah.
Man.
Yeah. Well, someone was asking me about you earlier. I was like, he's the only guy I know who describes himself as a vibes-based investor.
Yeah.
Badge of honor, baby.
Badge of honor. Yeah.
I love that though.
The vibes investor, anti-VC, VCs, is this whole slew of them.
Yeah. A valueless ad investor.
Yeah. That's what I lead with. That's how I win deals. It's like, what you see on the tin,
I love that. That's frank honesty. And also, what's really annoying is of anyone that I know, not to be too sycophantic, but to give you some flowers, you add so much value because you're always introducing people. So Ken goes around being like, yeah, VCs, they don't add value. We just give you capital, get on with it. And then he goes and does the exact opposite. He's like Godfather to their kid a year later. And I'm like,
he knows everybody.
Undersell, over-deliver. I hate flowers.
All right, enough of being nice to Ken.
There we go.
Gaz, call him bald or something.
Insults with Gaz.
Shall we move on? This is what I'm really keen to learn about because I feel quite out of my depth, I'll be honest.
Okay.
ITV and the venture capital side.
Yeah.
And this sort of innovation around media for equity. Mm-hmm. For the viewers, but also mostly for me.
Okay.
Can you sort of run this through from like the ground up to get a real feel for like this sort of new model that you've created?
Yeah.
And
Sorry. Just getting excited over there.
Goodness.
We're ready for the main bit, baby. Sorry. Don't put that in the snippet. Don't put that on TikTok.
That has to go in. Yeah. So my current day-to-day role, I work for ITV Adventures, which is the corporate venture capital arm of ITV Studios and ITV PLC. That's one of the largest television producers globally, produce shows for ITV in the UK and then also for Netflix, Apple, Disney. But where the model...
I did not know that you guys were involved in all that stuff. Very cool.
What are the main Love Island? Trying to think.
Downton Abbey just made Rivals for Disney Plus.
That's why she recommended it earlier.
Yeah.
That makes sense.
Very good show. But I guess what's interesting about the corporate venture capital side of it is that we're focused on growing direct-to-consumer brands. They can be UK or more recently, we've also been looking at European brands. And I think generally a lot of founders and in general, people don't understand the leverage that television advertising can have and how much it can actually help you to scale quickly and differentiate yourself as well, because I think once people see something on TV, they immediately trust it. And ITV's channels, they reach almost 70% of UK house persons, which is, I think, a lot more than people think. And the media for equity model, it's different to kind of a typical VC cash-based fund, just because we exchange equity for advertising inventory rather than for cash.
And you're on a small team too. Like, see, at your career, you just gotten on smaller and smaller teams because at ITV, you're just one of two, right?
Well, yeah, I'm investment associate and I have an investment director in the fund. But yes, it's a very small team. But I think we see a lot of the consumer deals that are happening in the UK, and we're definitely trying to tap more into the European market as well now. So I think we have an opportunity to become a very specialized and reputable consumer investor.
Yeah. And with the consumer side, are you guys just doing like physical product goods or also like a tech platform for consumers, wealth tech or something like that, for instance? Yeah,
I mean, I think consumer is very broad. We're looking at a lot of consumer tech businesses. The areas that we're interested in right now are health tech, fintech, femtech, pet tech. They're all...
Pet tech?
Yeah. That's my favorite one. But there are a lot of new brands who are in those areas, and they need to find a way to differentiate themselves. And I think going onto TV kind of gives you an immediate edge compared to the competitors who are out there. And also through a media for equity deal, you're not using your current cash reserves. You can preserve your cash funding for other areas of the business, to scale operationally. Media for equity investment is just focused on the marketing side of things, and I think that alleviates some pressure for founders in terms of that is a big issue for them. How are they going to generate brand awareness, and how are they going to generate trust and differentiate themselves?
So, but will the founders, will they get just like like an advert in between the show, or would they get like product placement on the show depending on the product? Like how is it normally structured?
Yeah, so it's advertising inventory on the channels. We have a commercial team that work really closely with the founders to kind of prepare a bespoke program for the brand to reach the audiences that are most applicable to them. And yeah, I mean, you get to build a really close relationship with the ITV commercial, and they have a lot of experience in the brand building side of things because they've seen established brands and they've seen, newer brands grow rapidly. So I think it's kind of more than just the equity investment. You're also building the relationship with ITV.
I guess with that, do you see any I guess from a case study standpoint, right? How have you seen any like rapid growth stories from dealing with any of your portfolio companies dealing with the adverts team? What does that look like from, when you're looking at portfolio and say, okay, this company has made it to XYZ and we could attribute that to the work we've done?
Yeah, I think across all of our portfolio companies, we've definitely seen really strong measurable impact. So one of the companies we were working with, it's kind of an Apple Watch for dogs, and I think
I was so curious about this pet tech.
Yeah, and I think the growth that because I think it's also about category awareness. People don't even know that exists, and I think once you can kind of prove out that people are interested in that, it creates a lot of new opportunities for that category, not only in the UK, but also gives the founders the ability to expand into Europe or into Asia and to prove that they've been successful on TV and to have the data to back them up, which is, different data than what they have through kind of paid advertising, and backing up the brand and saying that they have a huge kind of media partner who they've already built a really successful relationship with. Yeah.
And you obviously help with the like actual creation of like the adverts and the expertise and the strategy behind everything.
Yeah, I think we offer the founders a lot of flexibility in terms of how they want to go creatively. We have we have in-house creative team, but we wouldn't say they have to go with that. It's just that it's helpful, if they don't have those relationships beforehand.
I just more meant that there are like people in house that like it's not just like you say a certain amount of like inventory. It's like there's a bit of help with the actual strategy, like you work with them on that side as well.
Yeah, definitely.
Yeah. Okay, so that's called value add.
Wow, who would have thought?
A lot of value add.
And obviously, like this is becoming. You mentioned this is becoming a bit more of a common thing with like these large media companies kind of doing this media for equity thing. How do you view like other folks in the space that are doing that model? Is it like competitive, or do you collaborate with maybe a Channel 4 Ventures as well, or it's more just like, knives out type thing, sharp elbows?
I think it is. It's a competitive space, obviously. I think, from the ITV perspective, we do deliver a lot of value add, so we prefer brands to work exclusively with us. But I think there are a lot of opportunities also for collaboration. It just kind of depends on what the founder wants and, how they see their brand direction, because we want to work with them. We don't want to, kind of push them into anything if it doesn't work for them. But I mean, there's always competition, I think.
Fair enough.
And so from your seat now, like where do you see it's, because it's quite a new model, right?
Yeah. So
where do you see this going, or is it just a case of like, are you still working through the kinks, or is this now getting adopted by other people?
I think it's a fairly new model. I think a lot of people and media partners are seeing a lot more value in the strategy. So I think the US didn't really have kind of a media for equity model before, but the broadcasters there, they're getting more interested in how they can work with it. And then also in terms of technology companies, so I think companies like Google and Snapchat, they could really leverage media for equity models as well. And I think they're exploring it at the moment.
How did you come across, obviously, again, very small team. How did you come across the opportunity? You know, was this I guess, this kind of shift for you as well?
Yeah.
Like new model, that kind of just like knew everything. It kind of sounds like from your career.
Yeah.
What was it like kind of finding it and, you know, the progress and getting into that kind of role as well?
Yeah, I think what stood out for me was the opportunity to work with, you know, a really reputable name in media and entertainment, and to be involved on the kind of corporate and strategic innovation side, which is, essentially what the CBC is. I think going from, a generalist kind of P investing role to a smaller fund, I think what was really attractive about it was the ability to have more autonomy, more responsibility, and also to, be like very closely involved in the UK consumer space and to specialize. But finding the opportunity was hard, but I think it was just something that I was always really interested in terms of how media companies are innovating, what the future of TV looks like, what the future of monetization of channels and streaming looks like. But I think it's also partly luck, just because I think I had the right background to go into the role, and I was able to explain like where my passion and for the space came from. So
I was going to say, how different was that like interview process? Was it like relative to maybe like Blackstone or KPMG?
Yeah.
Hollyport. Was it, given that like the nature of the model, were they looking for someone with a bit more like of a risk-taking attitude, or was it still quite a rigid sort of like competency-focused kind of test? Yeah,
I think even in the corporate venture space, there is that, you know, you need to be able to show that you have a solid background, so it's still quite rigid in terms of the case study and competency based interviews. But I think you do have more of an ability to show what you would bring uniquely, and to also express where your personal interests match the role, and how your personality could be much more successful in that role than somebody else who isn't as interested in it. Yeah, because I think for me, I was always interested in TV and film, and I think that made it easier for me to sell myself into that role as well.
Like genuine enthusiasm for the space.
Yeah.
I guess on the top, like the networking theme, right? Did you know the director before, and like, or did ITV reach out to you? Or did you see their own apply to it from a discovery standpoint?
No, I was just looking for opportunities in venture, and I came across it on LinkedIn.
Did you easy apply?
No, I think I
details are important, you know.
Did you easy apply? What a snide remark that was.
I think easy apply works for like really niche, I don't know, more niche funds or like boutiques and things like that. But I think the larger corporates, I don't think it works for them. Yeah, I think you got to click on the link.
Easy apply is the easy way to find your application in the bin.
Yeah. Agreed.
Really? I was smashing that button throughout the year. Thought I'd done a really good weekend work.
Just needs to work once.
Yeah. No, I don't think it. I don't know anyone who's had like, you know, don't know anyone at Citadel who was like, just easy apply, mate, and Big Ken just hired me up the next week.
There you go.
Like, it doesn't really work that way.
Maybe if you combine an easy apply, if you're going that route with a message, you know. Yeah. Could help.
It's not a bad idea. Yeah.
Next podcast episode. Easy apply with the mergers.
Should we do case studies with Gaz as well? Just get Gaz 100 easy applies. We can give him like a little microphone.
Easy applies. I'm not gonna...
Right, where were we? Keep going off track. Bloody Gaz keeps distracting us. back to the podcast. Might be worth touching on like social mobility in VC.
Yeah.
And obviously perhaps any advice for, people from underrepresented backgrounds in terms of how they'd follow your path.
Yeah, I think that was one of the things that I definitely found more difficult in terms of finding the roles, was just not having that wide network to start with, or not having an idea of where to go. And I think what you kind of have to remember is, even if people have a bit of an advantage over you because they already have that, I think now we're in a time where you have so much information that's just accessible to you, online, on YouTube, just doing your own research and kind of building your own niche in a way. And I think it's easy to kind of get dejected if you don't see people who look like you in the types of roles that you're applying for. But I think it's definitely changing now. I think you can always kind of, reach out to people, and I think they'll always be happy to help. So it's probably less of it's still a barrier, I think, now, but I think people know that, and they're definitely trying to make it so that it's more accessible to people from underrepresented cultures.
I think it's really interesting as well. Like, obviously, I don't think there's like a diversity mandate within the ITV CVC, but it's led by 2 women of color, which is actually very interesting and very different from most other funds, like for obvious reasons, I guess, right?
Yeah. I mean, I think that happened basically by coincidence, but I think it is really unique in the VC space in terms of, I think we do bring a bit of a different perspective on things, and I think naturally I think in your career you've had to show some grit, and I think when you're assessing investments or meeting founders, it makes you adaptable in a lot of ways if you've been through some challenges. So I think that even early on, if you're in your career, if you're facing rejection or things are feeling difficult, I think definitely down the line that's where you that makes you stronger in the long run in terms of as an investor and also personally. So I think something to bear in mind, definitely, when it comes to social mobility.
Do you guys, is there a way you can find out about these programs? Because when I was at Barclays, they did so much work on this, but I wasn't aware of like any of the programs before I went. I don't know if that's just because they were new, or like I say, it's just not something that obviously I naturally went and sought out myself. So like, how do you go about finding, people or programs that might help people actually break in?
Yeah. I think initially where I started was at university. There was a trading and investment society, and those kind of clubs, they already have partnerships, depending on which uni you go to, they already have partnerships in finance. And then I think it's about identifying people who are in a field that you're interested in and just trying to go for a coffee with them just to learn about what they do on the day-to-day. And I think kind of the earlier that you can do that and find out what you really want to do, it definitely helps in the long run.
In terms of finding like people who obviously like may represent you in terms of like color or religion or just like gender, like is there like a way to go around finding people who might help you, or is it just sort of people on LinkedIn who just that you can actually see sort of like represent you? Yeah,
I think for me, I definitely always use LinkedIn a lot more. I think now there are more groups who are working on the kind of social mobility aspect. So I think like Diversity VC, they present a lot of opportunities. Then there's kind of
women in VC as well. Sophie Winwood, I think it is.
And I think finding groups like those, and I think to be honest, a lot of it is kind of just Googling people or things that could help you. I think that's, you kind of have to be a bit entrepreneurial about it, because I don't think it's something even now that you're just going to know about or people are going to tell you about.
What about Eleanor's program that you're on?
Yeah, no, Newton Venture program. It's also good for that as well, and that's more so for ecosystem stuff. But like, I mean, there's a lot of stuff out there. I mean, like included VC for like every stage people want to break in. You've included VC, baby VC is another one. There's more than a few of them, but again, it's like looking at, honestly, I only learned about these after getting into venture. But like, but But I think also, if you're the type of person that's going to be looking out for these kind of things, that's probably a quotient of you eventually ending up in there as well. I would say those things are probably correlated. You're someone that's going to be looking for things, naturally curious, and you're going to take the opportunity to go get in those as well.
I think that's a good point, that you learn about these programs like when it's too late. Like you've probably already got where you need to get to. Which obviously part of the reason we do the podcast is to like help people get more information. I actually have a mate that left my old role to join the military, and I get quite a few messages from like his friends, like squaddies, officers, whatever, basically asking about what like Barclays did for military people. So I think the like takeaway from that for me is just don't be afraid to message like a friend of a friend, and just open-ended message like, does your firm have any like programs aimed, specifically or whatever? Because you if it's a friend of a friend, you always sort of make an effort, right?
Yeah.
Because you want to reflect well on him and yourself. So they're quite good people to ask if you can get like a referral, even if it's like an open-ended question. That's probably quite a good way to go about it.
Yeah, I think one thing that I learned over time in terms of networking, I thought, networking, it's just, you're just going out and meeting people and finding things out about what you want to do. But what I realized is it's actually, yes, finding those people, but you have to ask them for something, I think, because I think at the end of the day, if you want something and you don't ask for it, nobody knows that that's what you want.
Closed mouths don't get fed. My trick, and this is free game, free 99.
I need this.
I usually say, I'll say, oh, is there anything I could do for you, right? And they'll say something, and hopefully it's reasonable and attainable. But then they'll usually flip that back, and it just changes the dynamic of things. I've found it's quite nice.
Yeah, I think that's a good point. Like trying to provide some value as well.
The value add.
Yeah, but Josh was good at that. To give him his credit, like he was very good at tennis. So he'd be like, why don't we just play tennis? I'll give you a hitting partner, give you some tips, and then you get them on tennis court for an hour, and then he gets to know them. And that was quite a good way to go about it, like knowing your edge, in that sense. And if you're asking for introductions, then being able to be like, is there anyone that I can introduce you to from my network, even if there's an asymmetry and they're a hedge fund manager and you like, you never know, like they might be like, I'm trying to get into this golf club, or I'm trying to do this, and you just you might know someone at the office or whatever, like you never know, you might actually be able to help, and if you can, then it becomes like a much more symbiotic relationship.
And I think when you've spent a couple of years in your career as well, I think people do kind of just you have a bit of imposter syndrome, I think, when you're starting out in a new job. But I think a lot of that is just confidence and being confident in yourself, to know that you can add value. So even if you feel a bit intimidated, I don't think that you should kind of think, oh, they know so much more than me, and I don't know how I can add value to them, because there definitely is something.
Yeah, and definitely knowing what value you add as well. Like, what do you want to be known for? Like, I was speaking to a guy who wants to break into VC, and I was telling him, like, the networking thing. You do this, be friends with people, build relationships. And I was like, but there's also like, who are you? Like, I'm probably a more connectors, commercial kind of person, but like this guy's working in product. I'm like, okay, well, maybe you should just dig into that a bit, be known as a product guy, and build that out, right? So I guess, on that note, what do you see yourself? Techie, product, commercial? What do you think you're?
I think in terms of networking, knowing people and knowing who to introduce people to, and kind of just offering that, even if you're not going to get anything personally, I guess, or for your fund out of it, it's a really good way to build trust with people around you, and and create new opportunities. But I think also for me, having the kind of financial background and commercial strategic in my day to day, I think I can add on that.
Just well-rounded, everything. Love that.
And I think the last thing to like maybe add is that someone once told me, it's like, he was joking because he's sort of a retired trader guy. So it's like old farts like me. We just love to be, asked for our opinion and our like advice and talk about ourselves a bit. So like, these guys that are a bit like longer in the tooth who've made quite a lot of money and might be like netting or gearing down. Like, yeah, a bit of flattery in a way of being like, really like envy like what you've done with your career. It's like really impressive. Like, how would someone like me like emulate that? It's quite an easy way to sort of win favor.
So obviously you've been here for 3 years, not in this room, but at ITV.
Yeah.
What is like the biggest learnings you might have had in one, obviously media for equity, in this role you've had, and just kind of working in big corporate as well. What are some things you've learned, or like top learnings that you'd like to share?
I definitely learned. I think you build confidence over time, and I think that is one thing that differentiates you when you're in a room with people who are making decisions for you to become part of that decision-making process. A lot of it is in a big corporate, there's obviously a kind of bureaucracy. There's, I think in corporates, generally large corporates, there tends to be a bit of ageism. And if you're younger, people think you don't have enough experience to add something that's valuable. But the more that you do it, I think you're kind of breaking down those barriers, and the more people are receptive to hearing a new perspective or hearing a new point of view. And I think it's really important to give your opinions, to build your own personal brand, and to show how invested you are in what you're doing. I think going back, I stopped myself a lot from saying exactly what I thought, just because I felt like everybody in the room knows so much more than you, but that is not the case. Like, they might not be as much in the detail as you. They might not have looked, into certain things about the investment or whatever task it is that you're working on. So if you have an opinion, I think you should say it.
Yeah. And, obviously time is everything for it, but in terms of building your own confidence and personal brand, what have you learned about that? I guess from an internal and external perspective. Obviously, like, you're doing ICs within ITV, but then also like anyone outside of ITV. How have you been like building your confidence and your own personal brand over time?
I mean, I think that is the thing. I think it takes time. I think once if you go through a grad scheme, technically when you are ending that, you're pretty much homogenous, to everybody else who's done that, unless you really had an interest early on in a specific sector and you already worked on a lot of deals. But I think once you know what you want to do and you just sustain your interest in that field and be able to talk about it confidently, be able to talk about the sector, I think that definitely helps in terms of your personal brand. And I think confidence in terms of external networking, you kind of have to believe that people are on your side, that people are not against you in any way. They want to help. Because that's my experience. Like, I think before I used to not want to reach out to people, or, not want to put myself out there. But actually, the more that you do it, you find people who are like you, who have been through similar things to you, and their perspective adds a lot to how you think about yourself. Like, I think I've changed a lot since I met people who are like-minded in VC and who have different backgrounds and who've been through different things. I think meeting them kind of shapes your view of yourself as well, and what you bring to a team. So yeah, I think talking to as many people as possible really helps.
And out of interest, is there like any other advice that you might like give your younger self, apart from maybe just be more confident, speak up, have more faith in yourself? What other things would you like tell yourself if you could go back in time?
Oh, that's a bit deep. That's quite deep. I mean, I think those are the main ones. I think focus is really important. Like, if you identify something that you like, I think you shouldn't talk yourself out of it. Partly that is related to confidence, but also, I guess, in terms of fear of things not working out. And because of that, you don't put, you might not put your all into it, or you might talk yourself out of it. And I think, I would definitely not do that. I think you have the ability to do more than you think that you can, and you have something unique to bring whatever situation you're in. And at the end of the day, you're building a reputation over time. And so, the work that you put in then is always going to pay off.
Inspiring.
I think that's fair.
I'm inspired.
No, I think that's fair. That's like your biggest impediment to a lot of this is yourself.
Yeah.
Yeah.
You got to back yourself.
Yeah.
But you see it all the time, right? People, like our friends, stay in jobs that they don't like, or have these like passion projects, but like, never now, or I think just like having some faith in yourself to actually like execute.
Yeah.
And even if you get it wrong, like I think you always think, like everyone's going to laugh at me, and no one worth knowing does.
Yeah.
Can we do some quick fire on like media stuff?
Okay. Yeah.
Yeah. Who's the worst person? No.
Oh my God.
Yeah. What's I was going to say favorite like TV show you've worked on, but maybe the favorite one coming up.
Worked on.
Well, not worked on, but like
worked on.
I don't know, it's got associated with.
What's your favorite ITV production?
Probably Downton Abbey. It's a classic, right? It's like you can really get into it. It's very nitty gritty drama.
Love a bit of drama.
Yeah, very British.
Yeah, I haven't actually seen Downton Abbey. Favorite maybe like trend coming up? Is it? You said pet tech.
Oh, in the consumer.
Or generally like, yeah.
Yeah, I think health tech and femtech, the ability to track your personal data more closely, I think it's probably going to change, a lot of the ways that we consume everything around us, to be honest. So,
okay, that's quite a good point. Career highlight.
This podcast, obviously.
There we go. I love that. It's going to be on her CV as well.
Yeah.
Not many people are, gone KPMG, sort of Blackstone, ITV, who choose the mergers as the highlight. So I'm going to write that in my diary tonight. And then a classic. Do you have a book recommendation? I
always go for Pride and Prejudice. I think, it's a good classic novel. It's quite interesting in terms of, socio-economic dynamics. Yeah, maybe cut that one out. that was rubbish.
Not a light read.
Yeah, not really. I think let's just skip that one. I do read a lot, but I read fiction only.
Gaz is still on the Hungry Caterpillar. Okay, well, brilliant. I think we'll probably leave it there. Just to say thank you so much for coming on. Is there anywhere, do you want people to find you on LinkedIn, or should we keep that under wraps?
Yeah, no, happy to connect with people on LinkedIn. It's Mahim H.
Brilliant. Well, I'm sure you'll be flooded with message requests or people asking you for jobs. So
yeah, cool.
Feel free to deal with those.
No problem.
But yeah, thank you so much for coming on. Obviously, Ken, thanks for a good year for doing this journey.
Yeah.
Gaz behind the scenes, as ever. We want up the Gaz. And yeah, just to everyone else who's supported, thank you very much. And really looking forward to everything that's coming next year. It's going to be pretty transformative. So
a lot of big news coming out.
A lot of big news. All right, brilliant. Well, thanks so much. And yeah, tune in January, where there'll be weekly episodes.
Thanks.
Thank you.